So friends, we have already seen that the OCI, other comprehensive income, can be classified into two categories, that is OCI-NR and OCI-R. Now we will quickly go through those list of items which will be classified as OCI-NR as well as OCI-R. Okay, these items I am just telling you for your information. Now the meaning of these each and every item you will appreciate or you will understand only when you learn that particular standard in detail. But let us see what all are the items that are included in OCI-NR and OCI-R. So we will start with OCI-NR. So OCI-NR means these are items which needs to be classified as OCI and upon derecognition from the balance sheet will not be routed to the profit or loss. Okay, that is NR, OCI-NR. Now the first item which will come, or the very common item which will come as OCI-NR is the revaluation reserve, changes in revaluation reserve. Okay, IND AS 16, that is property, plant and equipment, and IND AS 38, that is on intangible asset. These IND AS standards requires you to transfer revaluation reserves to an other comprehensive income. Okay, and whenever you create an revaluation reserve and you transfer it to the other comprehensive income, on you derecognize or any change in that the revaluation reserve, it will not be routed to the profit or loss, rather it will directly get transferred to the reserves. That is the first item. Then second item, remeasurement of defined benefit plans. That is IND AS 19. This is the item which we saw in the previous video as an example for OCI item. Actuarial gains or actuarial losses. Okay, so actuarial gain or loss on defined benefit obligations. DBO stands for defined benefit obligation, as well as there could be actuarial gains or losses on the plan assets. Okay, again we will deal about this in detail when we take up IND AS 19. The third item is equity instruments through other comprehensive income. Okay, that is 109. As per IND AS 109, whenever you have investments in equity instruments, you can designate certain equity instruments as OCI, okay, or investments through OCI. Okay, such items which you have classified as investment OCI, if there is any change in the fair value, okay, of such investments, it will not be taken to profit or loss, rather it will be only taken under OCI. Okay, suppose you have got an investment in Infosys shares. Okay, Infosys shares. The cost price is, let's say, rupees 2000 per share. Okay, now this you made the investment on, let's say, 1/4/23. Okay, and on 31/3/24 you saw its market price, and the market price is 2500. Okay, 2500. So there is a gain of 500 rupees per share. Okay, now what do you do with this 500 rupees share? Okay, now for that we have to see what is the accounting of this Infosys. We will learn about that in detail when we take up IND AS 109. But for the time being, you keep in mind, you can designate this Infosys investment as equity investment through OCI. Okay, and this designation is irrevocable. Once you designate, you can't change this designation, and it has to be done at the time of inception, that is making the investment, that is on 1/4/2023. Okay, so on that date, if you classify or designate it as an equity investment through other comprehensive income, then whatever change is going to happen in this fair value, 2000 has increased to 2500, so there is a gain of 500 rupees per share. This will be taken through profit or loss. We call it as fair value through profit or loss account, FVTPL. Okay, and this will not be taken to P&L, rather we will take it to fair value through OCI. So this will come as FET OCI. Okay, so generally any gain in the unrealized gain in the equity investment, it will be taken to profit or loss. But if you specifically designate it as an equity instrument through OCI, then any gain or loss cannot be taken to profit or loss, rather it has to be taken to FET OCI or fair value through other comprehensive income. So that is the third item. Now when you come to the fourth item is little technical. Fair value changes relating to on credit risk or financial liabilities designated as FETPL. Again, this is something which we will learn when we take IND AS 109. I am not spending time on that. Now next, share of OCI in associates or joint ventures to the extent not to be reclassified to profit or loss account. So when you prepare the consolidated financial statements, there could be OCI items which belongs to the associates or joint ventures, which you need to add with your OCI. Okay, so the share of associates as well as joint venture share in the OCI, that should be added. Now if that OCI in associate or joint venture, if it is non-reclassifiable, then the same thing when you add with your parent entity's OCI in consolidated financial statements, it should be shown as OCI-NR itself. So this is on group balance sheet or consolidated financial statements alone. Okay, and if there is any other item which is specified in the IND AS, that is a residual category. So these are the items which will come under OCI-NR category. Now we will see which all are the items which will come under OCI-R. That means upon derecognition, these items have to be reclassified through profit or loss. Okay, the first item, exchange differences in translating the financial statements of a foreign operation. So whenever you incorporate the results of a foreign operations to your books of accounts, there could be foreign currency reserves or foreign currency differences or exchange differences, and this may be treated as OCI item. And these OCI items, when you bring it back, it has to be routed through profit or loss account. That is one item. Second item, gain or loss on debt instruments through OCI. Again, 109, there are certain debt instruments which you designate as through OCI. Any gain or loss on such debt instrument have to be routed through the profit or loss. Then the effective portion of gain or loss on hedging instruments in a cash flow hedge. We will deal about cash flow hedge when we talk about IND AS 109, so I am not spending time on that. The next one, share of OCI in associates or joint ventures to the extent to be classified to profit or loss account. So in this category, I told you, whenever you have a share of OCI which relates to your associates or joint venture, if it is classified by the associate or joint venture as OCI-NR, then the same thing have to be OCI-NR in your group balance sheet. Similarly, any share of OCI in associates or joint venture, if that OCI is classified as OCI-R in that associates or joint venture, then the same thing when you consolidate in your balance sheet or CFS, it has to be shown as OCI-R itself. Okay, then next one, others. So if there is anything else which is mentioned in IND AS, that also to be included. So friends, these are the major items which has to be classified under OCI-NR and OCI-R. Now we will deal about all these things in detail when we come to that particular standard, but this is only for your understanding right now. I hope that's clear to you. Thank you.